What do I mean by real estate is not a day trade? What if I told you that 95% of the people out there, the interest rate doesn't matter, the home prices don't matter, the market doesn't matter in general? We're going to dive into that and why next. What's up, everybody? Jeremy Kane, eXp Realty, coming at you from a remote location at one of my short-term rentals, and absolutely excited to talk to you about this topic today. But first, please like, comment, subscribe. As always, if you give me a comment and have a question about the market or would like to speak to me about your exact situation, because at the end of the day, your exact situation is all you should be worried about, not the market, not what your neighbor's doing, not what your brother did. And we can dive into your situation, talk about it. Throw me a comment below. Love to have that conversation with you and talk to you more in depthly about what this market means to you. All right, so real estate is not a day trade. All this information about the market and home prices and interest rates and all this stuff, at the end of the day, does not really matter, because especially for those people that are most concerned about it, which tends to be the people that own homes, you're going to buy and sell in the same market. And I've said that before, but I want to dive into it a little bit right here. If you are buying and selling in the same market, you're going to win on one end, you're going to lose on the other end. If you did it 2 or 3 years ago, you are going to get great, value, top dollar, record price for your home. But then on the back end, you're going to be buying in that same market. So you're going to be paying top dollar. Although the interest rates were low, if you have to go $50,000 to $100,000 over, it's just quite like if the interest rates were up a point or two. So that's something that we really want to dive into, as when we saw prices go that crazy high over, we were able to do it because the interest rates are low. But now on the back end, now that interest rates are high, we have all this fear and all this stuff that's built up, but we're getting better deals. Sellers are willing to make concessions, seller buy downs, all of these things that you can play with the rate, because there's less demand. People are, pulling back. They're a little bit scared of the market because everyone's reporting all of this stuff about it, but you still are getting a deal. So maybe you would have to pay $100,000 over asking price, at certain price points, and now you're getting it for $100,000 under. That's pretty drastic in those higher price points. So it's realistic. So that's where it doesn't really matter, because regardless, it's your monthly payment, and monthly payment is staying pretty stable for those people that were having to go way over and break their budget before, and now they're having to pay higher interest rates. So and the creativity wasn't really there with the buy downs and all of that. So that's really who it absolutely does not matter for, the ones that are buying in the same and selling in the same market. Now, the ones that are entering, the first time home buyers, and the ones that are exiting, we'll kind of talk about. Let's start with the ones that are exiting. The ones that are exiting, maybe going to live with a family member, maybe going to a senior community, maybe exiting the market altogether and moving, states and locales. For those people, you're really cashing out at something that's pretty great, unless you're moving to, one of the metro Seattle or New York or Toronto, or, somewhere where the prices are higher than where you're moving, then it's a little bit different. But for most people, and what I see here in Colorado, is people are moving to where home values never really skyrocketed, right? So you're moving to a different market. So you're able to cash out high here, regardless if, the home prices, some places are saying they're down 6% and all this stuff. Well, they fail to notify you that they were up 40% over the last 2 years. So giving back a little bit of that is, it's not amazing, but you'll never time the market exactly right. But you're cashing out at a high level still, 30, even if you take away, 6 from 40 or 36% over 2 years, that's quite the investment. I don't know any stocks or any other investments that give you that return. So you're still winning there, and you cash out, and you're going to a place where you can buy something with cash, or you don't have to buy anymore. You're going to a senior community or whatever that may be. If you're exiting the market, you're still gaining. You're still getting the benefit from all of that. And then the next one is the first time home buyers, right? And first time home buyers, affordability is something that's real. I hear that. The honest truth is that your rent's going to be unaffordable at some point too. If you're living in, one of those hotbed markets, rents are still up, things are still moving along. Trust me, as a landlord, I know. And it doesn't matter. Even if your rents are stable and you could get the same house for $2,500 that you can get for $3,000. And if you purchased it, right, or your mortgage is going to be $3,000, but you're paying $2,500, 100% of $2,500 in your rent goes to someone else. So I don't care. You're paying 100% interest rate. So don't even come at me with the 7% interest rate is absolutely unfathomable. I get it. And I get that there's other things involved, but you're just throwing that money away. There's absolutely no gain. There's no investment. You're paying for a roof over your head. Whereas if you can get into a home and you maybe have to pay a little bit more, at least some of that money is going to principal buy down. Then you have to factor in appreciation. And as you may or may not know, in the Denver area, the average appreciation year over year for 40, 50 years is around 6%. And so you're going to get that appreciation. And the bottom line is, back to the day trading, if you buy right now, you have a home, you have the principal buy down, you're not going to sell it tomorrow. Even in the best market, when the homes are appreciating like crazy, if you sold within 2 years, you were going to be tight with your fees and all that stuff, not to mention your taxes. So we're not selling it today. We're not selling it tomorrow. You're going to have this investment. It's long-term. You can control your rent. It stays the same. You control your mortgage payment, right? Whereas in a rent, you have absolutely no control. You're throwing 100% of your money away. And so the market doesn't really matter. Because if you're that focused on the market and you're that focused on your investment, how are you paying someone else's mortgage and building their wealth, paying their principal buy down, regardless of the market? So we can't be uber focused on building our wealth and the market and getting in at the best time, while we're literally just burning money on this end. Whereas if you get into something that's affordable, that monthly payment is, maybe it's a little uncomfortable, but it's manageable. Maybe you have to party a little less or do something a little less. That's where it really comes into. And so all of the headlines, all of this stuff about the, home prices falling and the interest rates being record highs, which is not true, or, going up 4 points in a year or whatever that may be, it doesn't really matter because it's a long-term investment. The bottom line is just don't sell if you don't have to when the market's down, when maybe you lost a little value, or maybe you have that opportunity. But at the end of the day, until the day we die, we need a shelter, we need a roof over our heads. So that's why the market is this blown up thing and it's in the headlines. But at the end of the day, it doesn't matter. And so that's kind of my 2 cents on that as we talk about this as we continue to go. I just named every single person in the market, right? The only person that, I didn't name is that investor. And they're going to make their choices. There's still investors buying. There's still investors making moves. And so that's the only thing. And investors, again, like if you have somebody paying your rent, if you have somebody paying your high rents and you're still getting that return on your investment, then you're good to go. It's just maybe you don't enter at times where, there's uncertainty or whatever. Honestly, as an investor at this time, when home prices are a little bit down, sellers are a little bit more willing to deal, maybe you can find a deal. I mean, it's a little more possible when you're in this market to offer below asking or have people pay closing costs and get that investment property up to snuff before you rent it out, so you can rent it out for more money. So, I mean, honestly, I can't find somebody that the market's bad for, which is kind of crazy. I always say winners and losers, but at the same time, the losers are the people that don't own real estate. They don't, see the value, and they're sitting there throwing money away, renting, or worse yet, living with their parents. So that's my 2 cents. Real estate is not day trading. Let's stop talking about it like it is. Let's understand what's going on. Let's make sure that, we can afford what we're purchasing, and you'll be just fine. You'll have a home to live in, and it'll be all good. Jeremy Kane, eXp Realty. As always, comment below. Would love to talk to you about your situation and argue or debate or have a great conversation about this. So stay tuned for more stuff like this. And I'm super excited to dive into this Q4 market as we continue to go. And thanks for being understanding as I'm on a remote location. So we will be back to the normal Why Invest Wednesday studio next week. So we'll talk to you soon. Have a great day. Bye-bye.